the opening range breakout strategy, webinar number 1. Webinar number 1, the first webinar in a 6-part series. An introduction. So contents of this webinar will include the basic strategy, basic example 1, basic example 2, and resources and questions if there are any. The benefits of the opening range breakout strategy. First of all, it's a day trading strategy, which means that we only trade during the day. We close all our trades by the end of the day, and we don't hold anything overnight, therefore reducing our risk. You hold, with this strategy particularly, you hold your trades for a maximum of 3 hours. We're not holding it any longer than that. Basically, we want to be out of our trades by the US time of lunch. So if trading day starts in the US at 9:30. We're looking at being all out of our trades by 12:30, maximum or latest 1 o'clock. So that gives us from 9:30 to 10 we start entering. So between 10 and 1, so it gives us a 3 hours, which means it's a focus time 3 hours. By 1 o'clock US time, we'll finish our trading for the day, and we can go off. So it means we don't spend hours and hours and hours in front of the screen. No overnight risk, which means we're not holding our shares or our trades overnight, and that means if any news comes out overnight, we don't hold the risk of our trades, having big moves when we have no control over them. So once you have finished trading, enjoy the rest of your day. So we carry on trading and get caught up in the whole trading thing. We just keep on going. We don't keep on going, should I say. And once we finish, we finish. And it's a great way of working. You only spend 2 to 3 hours a day, and don't spend hours and hours in front of your screen, which means you can go off and enjoy the other things in your life that make life more enjoyable, like spending time with your kids or family, or doing some other hobby, or spending time on the beach if that's what you like to do. Trading the opening range breakout. Okay, the most liquid times of the trading day are as the markets open and as the markets close. So why do we trade the opening range? It's during the open that a lot of volume comes into the market. Well, why does a lot of volume come into the market? Well, traders have had a whole night to consider their trades, and these are executed at the open. So traders, especially hedge funds, the bigger players in the market, the banks, will look at opening, will look at starting the trading in the morning and executing their trades at the open, throughout the day, but probably most of their volume starts at the beginning of the day. Traders have a whole night to consider their trades, and these are executed at the open. Let's see if I can get a cursor up here. Okay, just to highlight what I'm writing through here. Okay, traders have the whole night to consider their trades, and these are executed at the open. There is also a lot of trading volume at the close. This is due to traders exiting and closing their positions before the market closed, leading to large moves. So you'll notice there's also quite a few large moves at the end of the day. During the middle of the trading day, when a lot of traders go to lunch, it is possible for an individual trader, mostly hedge funds, to move the market due to lack of volume. Okay, pretty self-explanatory. So that's all that. Okay. Let's go to the next slide. So what is day trading? Day trading is a process of trading stocks between minutes and hours during the course of a trading day. Typically, a day trader trading the opening range breakout strategy will stay in the trade on average around 2 to 3 hours. However, it is not uncommon to stop out of a trade within minutes of entering as the stock price reverses, or to stay in a trade from the start of the day till the end of the day close at 4 p.m. US time. Okay, so it is possible to stay in a trade until the end of the day if you're using a trailing stop and you've automated your trading stop. Then you can actually let your trades just run. But basically, if you want any sort of quality of life, you're not going to spend every single day, all day in front of the screen. You want to be doing other things as well. Basic strategy rules. So we enter long or short on the break of the 30-minute opening range. Close the trade on a break of the 20 exponential moving average, the opening range. So this is a good example of the opening range. This trade was on Baidu, and actually on November the 14th. What we do is we count the first 6 bars of the day on a 5-minute chart. You see the chart has 5 minutes. We count 1, 2, 3, 4, 5, and 6. Those give us the opening range. We draw in our opening range resistance line or demarcation, and from here we're ready to trade from the first bar after, even this bar here, after the range.